Americans For Fair Taxation presents the weekly Chairman's Report, written by Steve Hayes, president of Americans For Fair Taxation, and recorded by Bob Paxton, a volunteer with the Florida FAIRtax Educational Association. And now, this week's Chairman's Report.
Hello, I'm Bob Paxton with the AFFT Chairman's Report for Friday, May 31st, 2019. The Earned Income Tax Credit, a mess only the swamp could love. The Earned Income Tax Credit became part of the Internal Revenue Code in the Tax Reduction Act of 1975. The purpose was to provide a way for qualified lower-income workers with families to receive back some of the income tax dollars they paid during the year when they file their income tax returns the next year. The Earned Income Tax Credit did not then, and still does not, offset any of the payroll taxes lower-income workers pay, and these payroll taxes are generally the highest federal taxes paid by lower-income workers. Now, the Earned Income Tax Credit, as its name states, provides an income tax credit, not an income tax deduction. The difference is that a tax credit reduces the actual amount of tax owed, while a deduction simply reduces the amount of income subject to taxation. So, a $3,000 tax credit would reduce a $5,000 tax bill down to just $2,000, saving the taxpayer the full $3,000, making his refund $3,000 bigger. A $3,000 deduction would reduce a taxable income of $50,000 down to $47,000. So, if you were in the 15% tax bracket, a $3,000 deduction would save you 15% of the $3,000 difference in taxable incomes, or just $450. That's quite a difference. So this Earned Income Tax Credit is a really valuable thing to those who get it. Now, many agree that lower-income working parents have a really hard time making ends meet. However, in the grand tradition of Congress in the swamp, the Earned Income Tax Credit is very complex and requires over 50% of filers claiming it to use professional preparers. Just how complex is this Earned Income Tax Credit? The following information was posted to the TurboTax website. To qualify for and claim the Earned Income Tax Credit, you must, hang on here, have earned income and have been a U.S. citizen or resident alien for the entire tax year, and have a valid Social Security number, not an individual taxpayer ID number, for yourself, your spouse if filing jointly, and any qualifying children on your return, and not have investment income exceeding $3,500, and not be filing a Form 2555 or 2555EZ, and file a return with the single, married filing jointly, head of household, or qualifying widower filing status, even if you're not required to file a return. Hang on, there's more. Additionally, both your earned income and adjusted gross income cannot exceed the following limits: $15,270 or $20,950 if filing jointly. That's if you're not claiming a qualifying child. $40,320 or $46,010 if filing jointly. That's if you're claiming one qualifying child. $45,802 or $51,942 if filing jointly. That's if you're claiming two qualifying children. Or $49,194 or $54,884 if filing jointly. That's if you're claiming three or more qualifying children. Hang on, there's even more. If you're not claiming a qualifying child, you or your jointly filing spouse must have been born on or after January 1st, 1954, and you or your jointly filing spouse must have been born on or before December 31st, 1993, and you and your jointly filing spouse cannot be claimed as a qualifying child or dependent on anyone else's tax return. Phew, you got all that? Now note that this data does not tell you how to file for the Earned Income Tax Credit, but it sure is intimidating. Let's look at EITC fraud and punishment of work. The IRS estimates that between 21 and 26% of Earned Income Tax Credit claims are paid in error. Some of the errors are unintentional, caused by the complexity of the law, but some of the claims are intentional disregard of the law. Others speculate this number could be much higher. In addition, As the lower income parents earn more money, they start to receive less of an income tax credit. You can see from the information on the TurboTax page, people might actually turn down a raise because it will actually net them less than they could make from the earned income tax credit. So there's an incentive for lower income working parents to reduce the amount of their taxable income by not reporting some of their income in order to qualify for more earned income tax credit. In conclusion, instead of this earned income tax credit nonsense, let's look at the difference for working families that the fair tax would make. First, they would receive their entire paycheck without federal withholding or payroll tax deductions. They will receive a monthly tax refund, the prebate, which allows a family of 4 to pay no fair tax on the first $32,000 of spending on new goods and services. If the family spends some of their income on used goods, there's no fair tax on those. There would be no complicated tax returns to file, no records to keep. And the incentive to earn less than you can disappears because you were taxed only on your purchases, not your earnings. Now, the leaders in the swamp aren't stupid. They have their evil plans, and they work with their pals in Congress to protect the income payroll tax system because of the income it generates for them. They know that the fair tax would effectively eliminate the need for the earned income tax credit and other credits like it for lower income working families, but because the fair tax will reduce both their income and their control over people, they oppose it. The swamp and their pals also know the fair tax is the best way to fund the government. And they know, too, that if there are still working families needing additional assistance, then Congress and or the state legislatures can always pass additional measures to help those people.
This has been the Weekly Chairman's Report, written by Steve Hayes, President of Americans for Fair Taxation. Check back every week for news and information about the fair tax, and learn why the fair tax should replace our antiquated federal income tax system. If you'd like to receive a copy of the Chairman's Report in your inbox every week, sign up at fairtax.org or bigsolution.org.